Hi, I am Anna. I come from www.ntvforex.com. Amid rising tensions, China likely to reduce U.S. debt holdings. A Global Times http ntvforex.com news ID F0C6365 5 minutes ago by Anil Panchal. China's Global Times GT once again availed the opportunity to threaten the U.S. policymakers, via an editorial piece, during the late Thursday's trading. The state-backed media targets the U.S. debt holdings amid escalating tension among the world's top two economies. Key quotes: China may gradually reduce its holdings of U.S. Treasury bonds to about $800 billion from the current level of more than $1 trillion, as the ballooning U.S. federal deficit increases default risks and the Trump administration continues its blistering attack on China, experts said. NBSP China, the world's second-largest holder of U.S. debts, has been systematically but determinedly trimming its holdings of U.S. bonds in recent years. In the first 6 months of this year, China dumped about $106 billion worth of U.S. Treasury bonds. On a yearly basis, China's holdings of U.S. bonds dropped by about 3.4% as of the end of June. NBSP: one reason for the bond selling is because Beijing is increasingly concerned about the potential risks behind surging debt level in the U.S., experts said. NBSP: the U.S. Congressional Budget Office said on Wednesday that the amount of debt issued by the U.S. government will amount to about 98% of U.S. GDP this year, a level not seen since the end of the World War II and well above the internationally recognized safety line of 60%. The federal deficit is projected to surpass the U.S. economy's size in 2021. NBSP: on the other hand, the rise of U.S. debt amid a Great Recession will push the U.S. Federal Reserve to cling to very loose monetary policy to stimulate the economy and increase taxes. This will cause returns on the U.S. dollar to edge down, making the assets less attractive to bondholders including China, Zhou said. NBSP-XI also noted that China will slash its holdings of U.S. bonds if U.S. moves to sanction the country financially, such as cutting the Chinese mainland or Hong Kong out of the U.S. dollar payment system, or called SWIFT. NBSP FX implications: with the Wall Street benchmarks already bleeding amid tech routes, news like this adds to the market's pessimism and weighs on the risk barometers. However, traders may remain cautious ahead of the U.S. non-farm payrolls (NFP), up for publishing later on Friday. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.